All right, all right, all right. Settle down, everybody. Settle down. Turn your rock and roll music off. Hang on. All right. Good morning. Comment allez-vous? How are you? Man, I couldn't sleep last night. I hibernated. Like to welcome you to QuantBox. Yeah, thank you, Jim. Welcome to QuantBox Live. It's time to get your macro on. Oh my God, it's 6:32 on Wall Street in the AM. Approximately 3 hours before the beginning of trading. We got so much going on in the world. And QuantBox Live is about uncovering the best fundamental investment opportunities across the globe, not just long term, not just medium term, but since we also now measure, besides the economic analysis, we also measure market activity in the very, very short term, like right now, and the medium term and the long term. So we do both quantitative analysis of macroeconomic data, and we're measuring market activity like technical analysis and also money flow into risk on or risk off baskets. Whoa. So what the market's doing and maybe what the market should be doing could be two different things, but we measure both now. Amazing. So we'll look at that today. My name is Wayne McDonald. Been trading currencies and commodities and stock indices for quite some time, 2004. Doesn't mean I'm 25 years old. You're like, what did you do before 2004? I didn't invest into stocks and commodities and currencies. No, I was simply a venture capitalist in the Silicon Valley. Very cool. I also sat on a board of directors with George Soros. So if you're an investor, you might say, oh, that's interesting. Yeah, it was. Anyways, here we are. I since got a degree in macroeconomics from Harvard and then created QuantBox. I did a couple other things too, but QuantBox is amazing because I'm a fundamental trend trader. So I need to know the flow of capital around the world, and that's what QuantBox does for you automatically. It tracks the flow, and then it'll compare the data between two asset classes or two economies. We track the commitment of traders report and put it together with lots of pretty colors so it's easy to read. And we also have research tools. Like, for example, you could separate global levels of inflation or global levels of GDP. We also do comparative analysis between central bank policies and predict them out 18 months into the future. Hey, you want to try it? It's $8 to have a trial. Okay, so if you're not sure, take the trial. There's no refunds, right? This isn't a huge holding bank of money so you can try it out for a while and then cancel. No, take a trial, make sure this is good for you. But I'm telling you, it's beautiful. It's wonderful and you need it. If you're watching this on YouTube, it's 3 hours delayed on YouTube. I do want everyone to be informed. So it's on YouTube. I hope you join the community and be involved. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Okay, log into the dashboard today. Okay, this was yesterday, the RSVP for Q3 Global Outlook. I hope you enjoyed it. The recording is available. It's on the site. You've been emailed by the system, but also by me yesterday. If you still can't find the email, how about the email where I alerted you to it's time to log in? Go to that link, log in, and under the live webinar room, there's another folder called like webinar replay. Click on that and it's in there. Okay. So you can watch that. And of course, if you didn't attend live, you can still sign up to watch the recording. The recording will be taken down in 2 weeks, 14 days. I think now 13 days from now. So if you're going to do it, do it. All right, let's get on with it. Let me log into the Google Cloud on the proper Gmail account. Okay. Oh, I'm going to try this stuff. It's called water. So I got put a water bottle on my desk, and the first thing is it's in the way, and I got to move it out of the way. Water. All right. So, for example, we were talking about what the market is doing now versus long term. A lot of bearish things are becoming neutral. You notice that? Cool. 10-year T note 3.8. Now, it's been stable the last few days, hasn't it? But not long ago, like a week ago, this was over 4%. So money has gone toward the 10-year T note. So maybe out of the stock market and into the bond market. That dropped the yield from 4.08, I think was the high, all the way down to like 3.8. That's a big move. So money has definitely gone into the 10-year T note over the week. And in fact, let's look at that next, but the weekly point of view, since we're on the hump, right? On Wednesday. Second thing, oil high but flat, gold high but flat. Okay, S&P 500 not falling. Goldman Sachs is reporting. Many of the banks have already reported good trading revenue, good investment banking revenue, all that kind of stuff. Euro dollar flat today, 112.27, and Bitcoin flat today, still below 30,000. Okay, biggest outlier you can see is a rally in the Japanese stock market. And it looks like most of the stock markets around the world are up, including the UK. Why? Their inflation is falling. Finally. So, by the way, if you haven't attended yesterday's third quarter outlook, you should, because one of the things we look at is the UK versus everybody else on multiple different points of view, like GDP and inflation and all that kind of stuff. And holy smokes, is an outlier. The UK is in serious trouble if you look at it, if you do comparative analysis of that economic data. And so any good news is welcome. So now they're in a situation of no productivity but falling prices. Better than no productivity and high prices, right? So not as bad as it was. So good job, UK. I was pretty harsh on the UK yesterday, but good job today. Okay, one of the things I wanted to do, and I believe I have it near no economic analysis. I have it over here. Where did I put it? We have all these new totals. There we go. Swing trade heat map. I know I messed this up. I messed up the navigation. So I was going to unpack them, and then I want to repack them, and I'll get there, guys. I'll get there. All right. So this is what I want to look at relative to the dashboard. The dashboard is looking at right this second. When you look at the swing trade heat map, which is the same idea, we want to track money flowing towards or away from assets. And this is rolling on a 7-day. You can see 7-day change, 7-day change. So this is great for swing trades. In particular, if you want to almost build your own scatter plot, if you will, where what you kind of want to do is look for, technically trending assets that are going in the wrong direction or something, right? But nonetheless, you can sort this. Money is flowing to the NASDAQ big time. NASDAQ's up more than 30% this year to date, not even counting the October low. FTSE's up this week. Dow is up this week. S&P 500 is up this week. Okay. The Nikkei is up this week. The DAX is up this week. So all the biggest winners are the stock markets. Now, if you had a little bit of concern for the future, you might want to look at the breadth of this. Like, what if you felt like, okay, NASDAQ's up 5% this week, but it's almost just 5 companies of the index, and everything else was flat. Would that change your point of view? Maybe it would. But when you need to watch that video from yesterday, because we look at some things that point to very, very, very serious concerns about the economy. But then we look at a whole bunch of other things and say, not yet. So you always have to keep on your eyes on the potential. Okay, now the recession's coming. Okay. So, anyways, holy smokes, these are way up. They're the biggest winners. If anything did go wrong, those would be the most vulnerable as well. Okay. Yield on the 10-year T note falling, which is interesting because that means all the stock markets are up and the bond market is up. Remember that whole 60-40 portfolio grandpa told you about? It's dead. It hasn't worked for decades. So if you sit down with your financial advisor, the big fancy pants firm, and they're like, I want to give you a 60-40 portfolio because it's diversification. No, no, dude. Right then and there, they told you they have no idea what's going on. Since 2008, that's not right. So they haven't updated their software, aka their brain. Hey, maybe the guy was right in 1978. 1989, he was correct. 1993, maybe. But the bond market has been manipulated by the central bank and the central government now for a couple of decades, and that correlation doesn't exist. So, anyways, you can see all the stock markets are up. And when the yield on a bond goes down, that means money, the price is going up. So there's a, a bullish market in the bonds and a bullish market in the stocks. No correlation. Well, positive correlation. And if it truly was diversification, this would be a negative correlation, but it's not. Okay, Rand not working out might be an emerging market issue. Okay, USD Swiss franc is down. Okay, pound Swiss franc is down. CAD Swiss franc is down. Kiwi Swiss franc is down. Aussie Swiss franc is down. Okay, this week. Are you buying Swiss franc right now? You're like, and somebody asked me yesterday at the QuantBox presentation, why is Swissy so strong? And I'll show you right here. So you go to central banks. These are all the new things, by the way: new dashboard, new risk gauges, new COT report, new central bank report, new USD seasonality, new inflation matrix, new pound matrix. And I've been so busy, I haven't launched all the other stuff yet. I might have to wait till next week. I'm going on vacation tomorrow. Yeah, which is amazing because I don't go on vacation, um, which is amazing. So I'm afraid. What am I going to do? What am I going to do? What if my kids hate me? Yeah. Yeah. Anyways, going back to this. Okay. Um, when you look, so let's go through this. This is the future as predicted by the RBA. This is the future as predicted by the Bank of Canada. This is the future predicted by Switzerland, the Bank of Swiss National Bank. Oh, that's different from those. Here's the future as predicted by the ECB. Here's the future as predicted by the Bank of England, so on and so forth, and the future according to the Fed. Okay. How do you look at all that and remember it? You're not AI, right? I just showed you everything. Can you just draw that? And you're like, I can't draw that. I don't know. I'd have to go back and look at them 2 or 3 more times. Or you just look at this. What it's showing you, if you compare all these central banks' predictions of the future, okay, the Bank of New Zealand, the Reserve Bank of New Zealand, is the most dovish. And the Swiss National Bank is the most hawkish. Oh my God. Wayne, what does that mean? Well, when I go back to the swing trade heat map, it means Swiss franc strong, Swiss franc strong, Swiss franc strong, Swiss franc strong, Swiss franc strong. Try different. Andrew's like, hey, he can't do this. He can't scroll up and down. Um, change your browser to Chrome. Okay. Oh, if it blanks, if you get one of those, this is a function of the Google Cloud because we're using like, I don't know, 2 dozen different apps to display data. So sometimes you get like, yeah, I can't automatically create the little thing, but sometimes you have to give your browser permission to use the tool that's embedded into QuantBox to display. And so sometimes you just have to accept, like give it permission to do the thing it's doing. And it's usually just displaying something. So like maybe that box instead of popping up has to be accepted, but it shouldn't happen too often if you're using Chrome. If you're using, because remember, the Google Cloud is a Google product, and you need a Gmail to log into the cloud. So to use Firefox is just, it might work, but it really wants a Google product. You're on Chrome. Yeah. So, ideally, yeah, you have to have a Gmail account. You have to have a Chrome browser. You have to be logged into the right Gmail account. And that very often you have to do through here and changing your profile. So I have one, two, three, four, 5 different Gmail accounts logged in right now. So I have to choose the right one. But I probably have 15 different Gmail accounts, right? Hey, I'm an entrepreneur, right? So I got 15 Gmail accounts. So you have to be logged into the right run, the right session, the right browser, and all that kind of stuff. So, anyways, it's complicated. Cool. So, anyways, so that's how you use that swing trade thing. Okay. So, like I was showing you, very much risk on right now throughout yesterday's moves and overnight. The biggest thing is the change in the Great British Pound. Okay. And that had to do with with inflation being updated. So we'll take a look at this. Here's Great British Pound. I shorted it. What is it? The 19th? 19 days ago. And unfortunately, I shorted it again two days ago, and I got knocked out and I lost 3 pips. But that was the trade plan. This right. So I shorted here. And then it came all the way back, knocked me out, lost 3 pips, and then consolidated. And now it looks like, based on the news, maybe we can get directional again. So I'm going to have to try again. But that first trade, my entry's here. So I shorted here. My stop is currently here. So I have, no matter what happens, I earn 100 pips. Okay. So my idea here for my trade plan, technically, I feel like the way the market behaved to the UK inflation story, it favors me. So it'd be great if it came up to the moving averages and then made it down to here. That gets us to support technically, which means I risk it completely reversing. So if we do now like sell here and make a lower low, I have permission now to lock my stop and probably lock in. So uh, 82.60 is 100 pips. 81.60 is 200 pips. I can probably lock in 250 pips at that point because that'll get me to about here when we're down here. And of course, if I was worried, I could just take the profit, and that's going to be 350 pips or something. Excuse me. So remember the motto at QuantBox, because you have economic data and now you have market data. I'm sorry. I talked for 6 hours yesterday. Excuse me. All right. Because we have market data and economic data, the whole point of QuantBox is that you can get your fundamental game on. And because of that, why you're shorting pound yen. Okay. So for example, inflation is improved in the UK. So the Bank of England doesn't have to jack up interest rates as far as everybody had priced in. So now let's say 5 rate hikes are now only 4 rate hikes. And that fifth rate hike has to be priced out. Pound loses value. And if you say, well, you believe also inflation is going to continue to drop in the UK, probably because of energy prices, then that narrative will continue. Or maybe you look at it and say, this time of year, yen gets strong and pound is now topping out. Or you say, you look at the economic data, the rest of the economic data in the UK, and it's not something you want to invest in because it looks bad. Whatever. But you get to this reason of why you're selling pound or why you're buying yen. And now you have the confidence as a trader. So what QuantBox is trying to do, because you're informed, when you make your decision, you're more confident in what you're doing. And so what's the outcome of your confidence? You don't make better trades. Mm-mm. Okay. Remember, QuantBox is about changing the way you trade. So it's not necessarily better trades, they're more informed trades. And because of that, you're more confident because you know why you made the trade. And therefore, you have the confidence to let your winners run. And so here's a great example of being in a trade for 19 days and it's still working out. Cool. Okay. And if, right. And if things continue to improve in the UK, there's going to be less need for the Bank of England to raise interest rates and then less desire because it's less of a money magnet. Now, there we have a lot of other trades that scream time to get out. So let's take a look at a couple of the some of these other ones. Okay. This is a beautiful setup to the upside. At Investor Bootcamp, we did our stop, look, and correct session yesterday, and I think somebody wanted to sell this, and I said, okay, like I'm short pound yen and making money, so I'm like, I get what you're doing, and there might be some seasonality to the yen, but shorting the euro yen is not a good idea, in particular in our current market conditions of risk on and dollar weakness. And there we go. So I'm short pound yen making money. If you had shorted this yesterday, you're getting whooped because you have the right idea, but you bet on the wrong horse. Okay. Okay. Cool. But that move there tells me I should lock in some profit on my pound. Okay. So we will move some more. That's 150 pips. So I just want to be slightly above that. So probably 140 pips locked in. Okay, because I'm looking at the correlation. If all the other yens are going up following the stock market, and that's normal, by the way, then you want to be short the Japanese yen. Yen stock market up means yen pairs up because the Japanese yen weakens. Okay. So riding a 21 on this 5 minute. Let's go out to a 4. Okay. Okay. And let's highlight this because the previous trend was very much bearish. The big question is now that we got down near support and there's a big pullback, another test of pullback or test of support, then a pullback, a third test of support, pullback, and now maybe higher low. Yeah, this might be the game changer. Hey, Tuso, your mic's on, buddy. Okay. And so now more than yesterday, things may have changed because we have a new higher high. Thank you, sir. All right. All right. So you're like, whoa, 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 whoa. Is this meaningful technically? What's going on over the last 4 hours? Yeah. Yeah. And it's not that it's, I mean, yes, the higher high, but the fact that support held, support held, support held. Um, yeah. 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 So I may have to get out of my my pound yen. So that's why I moved the stop. I just happened to get lucky today that while the yen is losing value, the pound lost even more value. So I might have to just take all my pips and run. Okay. This is game on, by the way. Game on, Bubba. This is a game on scenario. So I wonder how things are working on the longer run. Risk on a monthly basis and neutral weekly and monthly. All right. So just slight bullishness now. Just slight. It was a little stronger. But nonetheless, you have it technically here. Okay. So, right, let's redo this and let's go. What do I want? I want, what should I do? Daily bear bullish? Daily bullish? I guess so. Okay. So this is a little cleaner. I think you can see it a little easier. Is this support? Yes. In fact, it's a support pivot. It's quite literally the monthly support number one. Okay. That puts us in an inside range. The technical pattern here is actually this. So that could still happen. But it's not the narrative that's being traded in the market, because remember when we're looking at the gauge, we're looking at the stock market in the United States, we're looking at the dollar index, we're looking at the volatility in the US stock market, we're looking at the Japanese government bonds, well, actually Japanese futures, we're looking at gold. One, two, three, four, five. Which one am I missing? Dollar index, VIX. Oh, yield on the 10-year T note. 10-year note. So we're looking at all these things like if money is flowing to the note, that's risk off. Why? Because you'd rather not buy the S&P 500, you'd rather own the 10-year T note. So boom. But if money is flowing out of the note and into the S&P 500, that's risk on, because yeah, you might earn 4% on the 10-year T note, but you could earn 30% in Nasdaq. So you're like, I don't want the note, I want the Nasdaq. So we track all this in real time. Day to give you a daily gauge, a weekly gauge, and a monthly gauge. And anyways, um, this might be your next trade plan if you're gauging market conditions as bullish. And remember, the market is always right. The economic data is correct. It's doing math, what we call quantitative analysis. It tells you what should be based on some logic, mathematical logic. And then there's what's actually happening. Are humans logical and intelligent? Some of the time, until you're not. And it's all pure, right? Especially when you're looking at the aggregate of all traders around the world. Um, Whatever they're doing is right. And remember, the market is trying to think 3 to 6 to 12 months in advance. So they're making decisions differently, not necessarily quantitatively. So, nonetheless, if you thought, for example, this could fall for another couple of months before it rises, okay, I could understand your logic, but is it falling now? No. Is it set up to be bearish? No. Should you sell it? No, definitely not. So your choice is to buy it or get out of the way. And if you can trade like that, if you can invest like that, you'll be around a long time. If you show up every day looking for a trade, um, you're always going to find something to do. And you very often could be wrong, especially if you're trading against reality and you're like, this is wrong. The CAD yen's going up. That makes no sense. I'm going to sell it high. No, no, that's not how you do it. So be careful, huh? I think CAD has been fairly weak, and so it's amazing that CAD is going up, but it shows you you need to be very careful. Here's Kiwi. Now, Kiwi is a dog with fleas. As I showed you, QuantBox has gathered data from the Reserve Bank of New Zealand and has found that they are the most dovish central bank out of the majors. So I'm short and making money. Okay. But I got to be concerned about that. So am I going to add another one? No. Am I going to move my stop? Well, my stop was here and now my stop is minus 3 pips. So if it comes up, I'll record it as a failed trade. Remember, I don't care about the percentage winners. I don't care. If you make 90% winners and you ask me to invest money with you, I'm almost certainly, without even having an interest in looking at your track record, I'm going to pass. If you have 90% winners, what you just told me is you don't know how to take a loser. And you have pride on your percentage winner, but you don't have pride on low volatility. You don't have pride on consistent returns. Your pride is based on number of winners. I have a boatload of break-even trades. By break even, I mean take a loss, -3, -5, whatever, statistically irrelevant losses. But here's the thing. If this comes all the way up, there's no way I'm going to call that a winner by locking in +5 trades. You're like, well, I took a trade, it failed, but it's a winner chicken dinner because I made 4 pips. Embarrassing. So anyway, so I can't lose here, but if it bounces and goes up, I'm going to record that as a loss. I took an opportunity and I didn't get my reward. My reward for that amount of risk, which would be the distance from here to, let's say, here, needs to be double or triple of that. So really, I need to be going here or more. Okay. So that gets me down to what kind of trade plan? M3 to M1 is what's predictable for this week. And then if I can survive here to here, would be next week's trade plan. All right, cool. So I've been in this one for 4 days. Hopefully we're riding the 21 and this drops. It's hard though, right? Because the end's weak today, but just shows you how weak Kiwi is. Okay. So I just happen to get lucky, maybe, that of all the yen pairs, I happen to be short currencies that are ridiculously weak at a time when the yen is ridiculously weak. So I haven't been punished. If I had been long euro if I had been short euro, I would have lost 100 pips because it's strong and I don't want to be short something strong. So I happen to be short Kiwi and pound, and today they're weak. So I haven't been hurt at all. So there's still hope for me because I bet on the right horse. Now, if this is the next move, then I'll lock in some profit. Because if it now makes a lower low and I shorted a lower high is in here, right? From this high. If I shorted a lower high and it makes a lower low, that's a fulfilled pattern. And I can lock that in as a winner. Okay. Cool. But not until then. Noise. Let's take a look at some commodities today. If it goes risk on, okay. S&P 500, how does that look right now? Not terribly risk on, by the way. That's a 5-minute chart. Let's go out hourly. No, let's go 4-hour. Yeah, it's still very bullish, huh? So almost out of position. Remember, our target is up here at 4,600. Okay. We're caught on the weekly R1, but I don't care. Okay. Now, with the stock market, it's a little more important than in other markets like currency markets. Um, I guess we're more advanced than stock traders. But anyways, stock traders tend to make a bigger deal out of R1 than I do. But nonetheless, I'm not going to be worried about the stock market until we're up here. Okay. So if I were to analyze this, I would say I'm bullish and I'm confident. Okay. Even if it fell all day today, I'd buy it. Okay, cool. Gold. Well, no, before we do gold, let's do oil. Our target on oil is 80. And if I drill in, we've gone from 74. Okay. From 74, and you can see I've highlighted it like a week and a half ago, maybe more. So it came down. This is the first level. This is a plan A aggressive trade. Let's delete it. Okay. And then what? Higher high, higher low. Okay. Do you have permission to buy? Yes, sir. Yes, ma'am. And the plan is $6 up from 74. Well, I went from 74 to 76, down to 75, and now might be climbing the ladder, right? To to heaven. Okay. Which is pretty good. One mini lot on oil is like one standard lot on euro dollar. So if you get that right, you get paid. If you get it wrong, be careful. Okay. So are you in the business of buying dips now? That's what the green zones are. Okay. So today I will be testing my new artificial intelligence site. And we're having trouble with now, like certificates for the security side of to make sure your browser session is secure. I don't know why, but we're having. But the good news is, I believe the first part of the project of reading your charts and giving your feedback is done, and I will be testing that. And so you, in that case, we would say, well, this is your trade plan for debt for today. If you said, Wayne, I'm interested in buying oil. Well, we've already hit our buy zone and this is the target. And tomorrow, this will be the buy zone. Whoa, what? So we'll show you today's trade plan and tomorrow's based on your bias. Cool. Now, if you said I wanted to short this, we'd have to look at it from that point of view and say, like, okay, like if you wanted to short this and do one of these, let me get rid of that. If you want to do one of these kind of things down to here, what the AI would do, and I know this because I've been teaching it how to trade. It's like, well, see, here's the problem. This is the AI talking. This market's not bearish technically on the 4 hour. So careful, right? Um, but how about on a 15-minute chart? Still not bearish. What about a daily chart? Still not bearish. You see why I might be bullish here? The daily is bullish, the 4 hours bullish, the hourly is bullish, the 15-minute is bullish. So could you make money if you sold it? Yeah, you could, but I don't think the AI would agree with you. Cool. Good thing I have a bullish trade plan, huh? Okay. So right now the developer's biggest concern is that it will take somewhere between 5 and 6 seconds to give you feedback on your trade plan. The asset you uploaded will give you 3 different time frames. Analysis, trend analysis, regression analysis. Um, I mean, there's a lot going on in the background. And then looking at, like, there's going to be volatility analysis in there, which is the next step. Projection analysis. Well, that's part of the, like, there's a linear regression and a standard deviation, 2 different calculations there on 2 different time frames using 2 different methods. I mean, there's really a lot going on there. And so the developers, because I've asked the AI to think so much, they're concerned to give you 3 chart plans with the plans drawn out for you might take 6 seconds. Meanwhile, we have to use hundreds and hundreds and hundreds of candlesticks on 3 different time frames to actually do the calculations. Like, bare minimum, there will be 200 candle calculations. There's no chart in this AI project. It literally just has the candlestick data and we generate the chart. So we have to have a minimum of 200 candles on multiple time frames. And anyways, it might take 6 seconds now to give you 3 different trade plans on your asset so you can compare what you were thinking about with these trade plans and say, "Oh, okay. It looks good on the long run, but be careful on the short run." Oh, well, wouldn't that be cool? So I will be testing that today. That's my focus today. Okay. Uh Essentially, I mean, there's a tricky part because of the data. So it's short term, medium term, and long term. There might be a problem though where we don't have 4 hour candles. We have hourly candles. We have 15-minute candles. We have daily candles. But so we have to do various calculations, Jim. So is it specifically 4 hour? There might be some of that analysis in the calculations, but it may not specifically. So we'll just show you the trade plan for the day, the trade plan for the week, the trade plan for the month. You see? But is it specifically 4 hour? No. But yeah, so you're only as good as your data, right? So yeah, we could just multiply everything by 4 and figure out the 4 hour candle, but then you'd have to r- I mean, imagine now you have all this complicated math going on with linear regressions and standard deviations. And I mean, there's a lot of math going on in the background. And I don't think it's just as easy as like multiply everything by 4. Right? So, anyways, it'd be great. And then what can the AI actually draw and stuff? Like, oh, just like because I asked the developers, I'm like, the linear regression we did and we're doing then standard deviation, and then we get trend channels. Just extend those trend channels, uh, you know, 5 periods ahead. And they're like, "Yeah, well, that sounds good, bro, but the math to do that is easy." No, I'm like, "No, no, no, no. A chart does it. You just do this." And they're like, "Yeah, not easy." Right. And they're like, "Would you like us to spend 25 hours figuring that out for you?" And I'm like, "At your hourly rate or for free?" Oh, we'll charge you for that. Forget about it. Don't worry about it. Move on. Right. And you get to that pretty quick, especially for a free service. Right. Anyways, taking a look here at gold. Okay. We hit our first target. Okay. We hit our first target. By the way, at the stop, look, and correct session, we right, a member of Investor Boot Camp is short this. Okay, which is cool. Counter trend trade. I was worried about 2 things. Well, I mean, look, this can work, and that was I said, if you're counter trending, you're following all those rules. But I'm worried that we're going to do this first before there becomes, like, let's say, a legitimate bigger counter trend. And I still think that's true. I think if I wanted to, I could buy it in this zone and then rally it up here. And so one of the pieces of feedback is counter trending. If you shorted that, you followed all the rules. And in fact, you want to be as close to this price as possible. But that would be a short-term short. And there's still possibility we go up here and then you're long-term short. And so we'll see. I believe that was Boris's trade. So we'll see how it's going, Boris. But good setup. And we'll see if that holds. And if we can get to this, which I call an Arctic turtle, will we go there before all bulls get out? You know, all bulls. This is some bulls, shorter term bulls, but up here, all bulls should take profit. So this is why I have it like this. Now, part of this is probably the fact that inflation is falling in the UK. The biggest holdout, by the way, of all developed economies. They were sitting at 8 or 10 when everyone was at 5, and then it dropped to 9. Well, you're like, Wayne, it dropped to 8.9. Okay, it dropped to 9, and then it dropped to 8. Now it's dropping to 7. Every time it drops, and there's less need to own gold. So you can look at this and say this is a technical move because it's a counter trend trade. It's true. But this move now is a fundamental move based on falling inflation in the UK. Cool. Cool. And the pound is punished. And you're like, what is that all about? Why did it, right? Why, like, let's go to the currency indices that are used. Okay. Why would the pound fall? Hmm? First of all, I have it outlined. But second of all, why would the pound fall? If the Bank of England doesn't have to raise interest rates as high as people priced in, then that kind of that rate hike that's been removed from the future removes, right, has to be priced out. When you price in a rate hike, it attracts money like a magnet. In my book, I literally call it money magnets. So the magnet here, based on the assumption that inflation is out of control in the UK, so the Bank of England is going to have to raise interest rates the highest. That still might be true, but the rate of that change has to be priced out. People assumed the high interest rate, they priced it in by buying the asset. Now the outlook has changed and that has to be priced out, and those traders are either taking profit or getting their stops knocked out. And so it's now less attractive than it used to be because the Bank of England is not going to raise as high. Cool. There you go. So thank you for being a subscriber to QuantBox. There's a lot of good, awesome, amazing stuff going on. I'm sure happy about progress in the world because when I first started trading 20 something years ago, this information was damn near impossible to get. And now it's all automated. Oh my God. It's all automated. It's like, there it is. You're like, why is the Kiwi falling? There it is. Look. Why is the Swissy strong? Look, there it is. Because we're comparing the outlooks of central banks around the world. And oh my God, it's so amazing. So I hope you find it wild and crazy too. Peace on earth. May the pips be with you. May our profits be above average. No outlook or no QB live tomorrow. No QB live on Friday. I won't be around. So I'll see you Monday. Cheers.